Get ready, guys. In this video, I share my October update of my $111,659 Tfsa dividend stock portfolio that has beat the S&P 500 over the years. I'll share our 16 holdings and which stocks I continue to purchase during this bear market that I have grown to love more and more with each and every dip. Let's do this! For those that don't know, my wife and I do our finances together. We have 3 accounts through 2 brokerages, Scotia iTrade and Wealthsimple. As you can see in our Wealthika account, the month of October has been volatile, but finished pretty flat. We are down 12.5% from our highs in April. It doesn't help that we had to sell off $50K worth of stock in September due to a family emergency. Man, it still hurts to say that. We really hope the markets continue to get smashed to oblivion. As many of you know, I'm just loving it. This means I can drip or buy more shares at prices I haven't seen in quite some time. Prices that, according to my calculations, are undervalued. The markets cooperated at the beginning of October, but have now entered the 5th bear market rally of the year, with the S&P 500 already up over 8%. Dare we call a bottom? As you all know, it's anyone's guess. All we can do is call what has happened in the past. In the meantime, us dividend growth investors like to accumulate as much as we can at a discount. If you are a little curious to see what we're investing in and follow our trades live, check out our new Blossom social account. You can download Blossom completely free and even earn $5 on sign up when you use the code Mr. Financial. My wife will post the details below. See you there. Let's get into the update and start, as we always do, with our one and only ETF in our TFSA, VFV, Vanguard's non-hedged S&P 500 index ETF. We made no purchases this month, so we still hold next to nothing, though a new low for the S&P 500 was made on October 13th, breaking below 3,500 points. Right now, VFV makes up just 0.2% of our portfolio. I have an allocation target of 5%, so we have a lot of work to do. Next, CANOE EIT Income Fund is making up 2.8% of our portfolio. This has been a part of our portfolio forever. I continue to see this income fund performing well despite the crazy market. That's because it holds so many high-quality blue-chip stocks that are presently in favor. Next up is our worst performer of the portfolio, FIERA Capital. It represents 4.1%. This remains on the chopping block as they continue to struggle in a difficult financial market. It will be interesting to see what the next quarterly looks like as the AUM, or Assets Under Management, continues to drop against a gorgeous year in 2021. This will release its quarterly report in November. Next is MANULIFE Financial Corporation at 4.4% of our portfolio. We used to own a few stocks in the insurance industry, but no more. We have a 5% target weighting on this position. MSC will be reporting its earnings in November, so we should make some purchases before it no longer trades in that 6 PE range. It has already risen 5% in the month of October alone. Next up, we have TELUS Corporation at 4.9% of our portfolio. This is one of 2 in the telecom sector for us. We have a target weighting of 6% for each of our telecoms, so we have some work to do with this one. TELUS will be reporting earnings at the beginning of November. It'll be interesting to see how Q3 results are after 9 months of high inflation. Usually, telecoms can weather it with pricing power. This stock is up 3% in October. We bought 0.4 of a share at a price of $28.34. Each and every bit counts. Next is our OG utility, FORTIS. It represents 5.6% of our portfolio. This has been a strong performer for us. Despite being down big in the middle of the month, it finished it flat. With strong earnings, continued growth guidance of 4 to 6%, and $4 billion in capital plans on track, it is no wonder they announced another 6% dividend increase, making it 1 year shy of Dividend King status. All hail almost King Fortis! Next up, we have BCE Inc. at 5.6% of our portfolio, slightly more than our TELUS weighting. We have a target allocation of 6% as we do with TELUS. It remains a core holding of our turf model portfolio, telecoms, utilities, REITs, and financials. BCE is trading up 6% in the month of October. We were able to drip 1 share at a price of $59.06, adding $3.68 to our forward annual dividend income. BCE will also be reporting earnings at the beginning of November. As I prepare this update, man, it is looking to be a huge month of earnings. Next up is another utility, ALGONQUIN Power and Utilities Corp. This is our renewable energy play. We divested quite a bit last month, but it still makes up 5.7% of our portfolio. This stock got hammered with the rising cost of borrowing since the beginning of the rate increases. This has traded within its support levels all month. We dripped 3 shares at a price of $14.22, adding almost $3 to our forward annual dividend income. It reports its earnings in November. Let's hope for some decent numbers, please. Here's a cute baby elephant to give your eyes a 5-second break from all of those charts. And back to the numbers. Next, we have one of our midstream pipelines, PEMBINA Pipeline Corp. It represents 6.7% of our portfolio. It is just crazy to think. Not long ago in June, it was flirting with its all-time high. This is trading up 6% with the rest of the market in October. It will be reporting Q3 earnings in November. I think we have a trend going on here. We made no new purchases, as this is already over our 5% target weighting after the huge sell-off from last month. Before we continue, please smash that like button to spread this video to as many DGIs out there. And we are so lucky to have started an awesome community of supportive dividend growth investors where we can discuss investing strategies and stock ideas openly. If that sounds like something you would like to be a part of, hit that subscribe button. We'd love to have you with us and hear your thoughts in the comments below. Next, we have another pipeline, ENBRIDGE, at 7% of our portfolio. ENB also made some ground this month, just not as much as PEMBINA. We wanted to add to this position, however, with the smaller portfolio size we have now, we need to be careful with our energy weighting. ENBRIDGE is already too heavy, but with a beta below 1, we can tolerate it. This also reports in, you guessed it, November. Next up, we have SMARTCENTRES Real Estate Investment Trust at 7.1% of our portfolio. This REIT is another staple in our turf portfolio. This is overweight for our liking as we have a sector allocation of 15% for REITs, and right now we're sitting at about 20%. This is in part because of all the divestments we had to make last month. REITs really got hammered in October. We bought 1.2 shares at a price of $26.50, adding just over $2 to our forward income. We consider SmartCentres to be one of the top 4 REITs in Canada. And guess what? It also reports Q3 in November. Next up, we have First National Financial at 7.6% of our portfolio. This is trading down on the month. It reported earnings at the end of October. They were meh, as expected. Translate that as you wish. But despite the drop in net income for Q3, FN increased its monthly dividend by 2.1%. That brings it to 10 consecutive years of increases. No small feat at all. This is very overweight for us, but with the great discount right now, we will look to add to this position and rebalance in the future. Next, we have TC Energy Corp at 8% of our portfolio. This increased 7% on the month after making a new 52-week low. This has now become our 4th largest holding. This will remain a core holding for us, but we will eventually need to trim it a little bit. That's because our divestments last month created a lot of imbalances in our portfolio. I am a little sad I turned off the drip for this bad boy, though I know it is the right thing to do. Investing is purely numbers. My emotions are for my wife, not a stock. Oh, and they also report earnings next month. Go figure. Next up, we have our mid-cap utility, Capital Power Corp, at 8% of our portfolio as well. This is trading down 6% on the month, but it is still our best performer on the year, up 21%, not including its dividend. CPX reported earnings right at the end of the month, and they were just beautiful. So much so they increased annual financial guidance 15%. We dripped 1 share at $45.44, adding $2.32 to our forward annual dividend income. We are looking to trim some more shares in the event CPX crosses the $50 mark again. Next up, at 9.4% of our portfolio, is Bank of Nova Scotia. This is our 2nd largest holding, though I still wish it was TD Bank. The share price finished the month flat. We were able to drip 1 share at $66.14 at the end of the month. That added $4.12 to our forward annual dividend income. With earnings coming out in November, I expect this to recover a little. I haven't seen these prices in more than 6 years. By our calculations, this is very undervalued compared to the other big banks. I need to build up a position in either TD or RY when the opportunity presents itself.
And now, our largest holding is
RIOCAN Real Estate Investment Trust at a whopping 12.9% of our portfolio. This has remained our largest holding since the pandemic. It is trading up by 5% this month. We were able to drip 3 shares and purchase 1.2 more at an average price of $18.49, a few cents more than we divested for last month. That added $4.30 to our annual forward dividend income. And one more thing we can't forget, this also reports Q3 earnings in November. So there you have it, all 16 holdings and what purchases we made this month with our dividends. We deployed a total of $334.08, adding $20 to our forward annual dividend income this month at an average yield of 6%. Not all of our dividends were reinvested this month, and of course, no fresh cash was added. We maxed out our contributions in January and withdrew $50K from our account in September. We'll have to wait until the new year to start adding back to our TFSA. If you followed our dividend income report, you'll notice that our forward annual dividend income has dropped by about $2,700. We'll get back up there by next year with some hardcore saving and hard work. We hope you can join us for that journey. Thank you so much for watching and helping the channel out by smashing that like and subscribe button. Until next time, I'm Mr. Financial.